Okay, it's been 2 years, guys, since I've done the stock market versus Forex video. Ages ago, when I was just getting started videoing. It's 2019. So I'm gonna give you guys the stock market versus Forex 2.0. Boy, it's got a nice ring to it, doesn't it? And I even promise to be completely impartial, guys. Well, even gone as far as asking my brother, who's been in the Forex market for 5+ years, on some juicy information that maybe I might have not found initially. And you guys know that I'm about that stock market investment life, guys. You know I already got that experience. So, boy, have I got some info for you guys.
You know what you're watching. DS Learning Finance. Whoa.
For those of you that don't know, Forex, aka the foreign exchange market, basically allows you to put your money into different currencies and capitalize from the difference in exchange rates from them, basically. So you put your money into pounds relative to dollars, and you, for example, make money because the pound gets stronger. That's a typical money making example from the Forex market. Cool. And the stock market, which most of us know what the stock market is about, basically allows you to invest your money into companies that have gone public, and effectively you're owner of that stock. It may be 0.00001%, but you're still an owner nonetheless, and therefore any dividends that comes gets paid directly to you because you are owner of the company. Cool, got that out of the way. Now on to the nitty gritty. First thing that sticks out to me above everything else about the difference between these two type of investment styles is accessibility, people. So say I wanted to put some money into either markets, would I be able to do so? So this £10 note I've got here, would I be able to invest this money right now, people? Well, if it's the stock market typical trading hours, then it's a big fat no, guys. You can't do it. And the reason is because right now, this time of recording is early in the morning. It's around 6:30, guys, a.m. The stock market typical trading hours, it starts from 8 a.m. to 4:30 p.m. according to UK market. So for me to be able to invest right now, it's impossible in the stock market. Whereas the Forex market, oh yeah, there's some good info, is 24/7. Like 24/7, guys. So that means even after I finish work, like I typically finish work around 5 p.m. I get home around 5:30. Let's say I wanted to invest in a Forex market. I could quite easily do so later on in the evening because it is 24/7. So that is a massive benefit, because it means that for the stock market, you kind of have to reconsider when and plan when you're going to make your orders. So me, whenever I'm making investments in the stock market, I have to do it tons of time in advance. So what I would typically do is place an order in the evening, and fingers crossed the next morning it will be executed, which it isn't most of the time. Whereas if it was the Forex market, I could just enter it when I'm available. So it's much more flexible. But don't forget, in the stock market, you do have the pre-stock market, which it basically allows you to invest before the stock market starts and after the stock market starts. But the catch with it is that transactions tend to be much more expensive, and there tends to be wider spreads, which basically means money, and more money that you have to pay. The next noticeable difference between the two markets has got to be volatility, guys. Oh my gosh. If the stock market was as volatile as me waking up early in the morning, then you best believe that the Forex market is like an active volcano. That's how volatile it is. The Forex market is absolutely volatile market. It is so sensitive, people. Oh my gosh. It is sensitive to news, to disasters, to politics. Like, don't get it twisted, the stock market is very highly influenced by that sort of stuff, but nowhere near as it is for the Forex market. Volatility is like a double-edged sword, guys. On one side, you can make massive profits, but on the other side, you can make massive losses. It just depends on what side of the coin you land on, which is heavily influenced by how well you invest your money. And in the Forex market, you get so much leverage, i.e. additional money for you to use to invest in. I was speaking to my brother and he was saying typically he gets a 1-to-30 ratio. So he puts £1 in and he gets £30 back. Let's take that even further. Let's say he put £1,000 in. He'll get £30,000 to invest with. Don't get it twisted. You still have to pay that £30,000 back. But you get more money to play around with at the same time. So what this does is that it takes those originally volatile extremes. So you know how you can make massive losses and you can make really great gains. It takes that even further with leverage. So it makes the market even more volatile, guys. So make sure that you spend within your means and you can spend within what you can actually afford. Be honest with yourself. Do not get carried away because things can get catastrophic real quick. And this doesn't mean to say that you don't get leverage in the stock market. You actually do when it comes to certain types of stock market investments. For example, options, it gives you so much leverage, but that's not the typical stock market investment style. We're talking about traditional stock market versus traditional Forex. Yeah, you get more leverage in Forex, hands down. Third major difference between these two types of markets is the way you invest is actually due to your strategy, basically. So according to my brother, the rule of thumb, unwritten law in Forex is basically you follow the trends. So don't try and be a duckling and try and go against the trend, make money like that. No, you typically follow the trend. And this completely clashes with what my investment strategy is, which is basically Warren Buffett. He's a successful investor, the world's most successful stock market investor. His saying is basically what I live off of, which is be greedy when others are fearful and be fearful when others are greedy. This basically talks about not following trends that people may have in the market, in the stock market. Instead, you should use yourself, you should evaluate your investments and go from there. You guys can see there's a big difference between those two markets. There's a massive difference. One's telling you to go with the flow, the other one's telling you to not go with the flow. Which one do you choose? And that's totally dependent on what type of investor you are. And one step further, when a stock market crash actually happens, in the stock market, this is where most investors, they'll typically run out the stock market. But the good investors, this is what they'll do. They'll smile and they'll grin because they know that is the ideal time to buy the best stocks for the cheapest prices, because everything is dirt cheap. You're allowed to invest during that period in the stock market. But, I was shocked to find this out with the Forex market. And it's that it shuts down people, completely inactive. So basically you can't make transactions during that period. Bruh. Or another route that they like to take is during that period you can invest, but they'll make the transaction fee stupidly high. So that basically is indirectly forcing you to not invest because you're going to have to work so much harder to make a profit. So either way, they make your life difficult when it comes to those critical moments. And it's because they know that you can benefit from it so much. So in order to combat that, they completely prevent you from trading during those times. I was shocked to find this out because this is a big one. And the final point I've got to make in terms of differences between the two, which is arguably the most important in my opinion, is the time frame. In the Forex market, there's no real sense of a long-term investing strategy. It's predominantly short-term basis. So this means that you actively have to watch your investments. And some people may not have the time to do this. Say you've got tons of work to do, you have 2 jobs, you have children, you may not have the time to do that. Whereas if you do have that trading time available, then maybe the Forex market might be for you because you can give it that devoted attention that it needs basically. Whereas in the stock market, you can be a short-term trader, you could be medium, long-term, hybrids of the 3, hybrids of some 2. You can base your investment on whatever time frame you want to, basically. For me personally, I'm like a medium to long-term investor. That's my strategy. And it's simply because I find it easier to evaluate a company based on a medium to long-term time frame than a short-term. And that's all she wrote, people. That's the end of my video. If I have left you in a state of more questions than answers, then just know That's a good thing, people. Use that to fire the hunger in your belly, guys, to want to research yourself and find out which market is better suited for you. Maybe it may not even be both of those markets. It could be maybe the bond market. It could be other things. Research further. Use this as a starting point, guys. And I've done a reading list, guys, in the short description box below. So make sure you check it out, because it's about stock market investment books that I've personally read and will definitely increase your investment, your stock market investment knowledge as well as skills. Check it out. It's your favorite YouTuber, guys, Dami Solari. I talk about stock market investments, I talk about property investments, financial management too. Give me that consistent content, you know? Before you guys can go about doing whatever you're going to do for the rest of the day, say it with me. Like, subscribe and share, people. DS Learning Finance. Whoa. Bye, guys.
Whoa.
Wow.